In this lesson, we're going to discuss the basic areas of finance. There are four main areas of finance. The first is corporate finance, the second is investments, third, financial institutions, and finally, international finance. Corporate finance is really the financial management of the firm. So if you're in this course, it's probably called something like financial management of the firm, corporate finance, business finance, or it could even be called principles of finance if it's an introductory course. But generally, the first finance course that you're going to take is going to be some version of a corporate finance class. And when you're in this class, you need to understand that you're making decisions for the firm as a financial manager of the firm. And there are three main areas that you're going to be focusing on. The first is the firm's long-term investments. So what are the products that the firm is going to make and sell? What are the services the firm is going to sell? Really, we're talking about the firm's general business. So what is it that we're going to do as a firm? If this is your first finance class, you probably won't get to this until the end of the semester because there are a lot of skills and background knowledge that you're going to need to learn along the way in order to be able to make these decisions about the firm's long-term investments. The second type of decision you'll have to make as the firm's financial manager is about long-term financing. So what we're asking here is, once you figure out those long-term investments you're going to make in decision one, now, how are we going to finance them? So whatever products and services we need to generate, what are the assets that we're going to need? And then how are we going to purchase those assets? Are we going to raise money by selling debt? So are we going to issue bonds? Or are we going to take out a loan from a bank? We could also raise this money by selling equity. So are we going to sell shares? And if so, are we going to do that privately? Or are we going to do that with an IPO, an initial public offering, and sell shares to the public? So debt and equity are the two main forms of long-term financing, and we'll talk about that at different points throughout the semester. And finally, the third decision is, how are you going to manage everyday financial activities? So it's all well and good if we're profitable in terms of our products and services, our firm's general business, but if we don't have enough cash, if we're not managing our accounts payable, accounts receivable, or inventory well, then it's possible that we may face financial distress even though we may be profitable on paper. So then we need to figure out, how much cash do we need to have on hand every day? We need to be able to appropriately negotiate our accounts payable, so our terms with our suppliers, and try to get them to give us a long time to pay. With our accounts receivable, we're deciding on how long we're going to give our customers to pay. And if we have a very large customer, say someone like Walmart, then they may want a really long time to pay. And so we're going to have to negotiate that, because the longer we give our customers to pay, so the longer our accounts receivable terms are, the less cash we're going to have on hand. And that can drive us into financial distress. So managing that is a very important aspect of our firm. And finally, how much inventory are we going to keep on hand? And when are we going to order more inventory? How long is it going to take to get the inventory? What's the shipping cost going to be? So those are the types of questions that we're going to need to answer as the financial managers of the firm. So these are the three main areas that you're going to be looking at throughout this course. The second area of finance is investments. We will talk about investments in this course because as financial managers, we need to know how our investors think. If you're a finance major, you'll probably take at least one, if not two or more separate investments courses. So investments involves financial assets or financial securities such as stocks and bonds. So those are just two forms of financial securities, but there are other financial securities, including derivatives like options and futures. So generally, the investment sector involves valuing these financial securities, looking at the relationship between risk and return, and deciding if a financial asset is overvalued or undervalued. And it may also involve asset allocation if you're a wealth manager. So how much wealth are you going to place in each type of financial security? So some employment positions for someone working in investments could be a stockbroker, financial advisor, or financial planner. Some designations that you would be thinking about if you're interested in pursuing this type of opportunity are a Series 6 or a Series 7, maybe a CFP, so Certified Financial Planner designation. Another employment position could be a portfolio manager, and in that case, you'd most likely pursue a Chartered Financial Analyst designation. Other positions include security analyst or a trust officer. The third area of finance is financial institutions. So this involves organizations like banks, insurance companies, and brokerage firms. These are also called financial intermediaries. They help users of funds obtain those funds from savers of funds. So for example, if you save your money in a bank, chances are the bank is using some of that money to provide a loan to someone who needs funds. And so the bank is a financial intermediary. It allows you, in an indirect way, to allow someone else to borrow money. They can also help transfer risk. That's something that insurance companies are involved in. So when you buy an insurance policy, what you're really doing is transferring risk to someone else who may be better able to manage or hedge that risk. Some employment positions in this area include a loan analyst, an underwriter, a programmer, or an investment banker. And since I just mentioned the employment position of a programmer, this is actually a position that's available in investments and also in corporate finance. At the moment, programming and financial analysis is a growing area in terms of employment positions in all areas of finance. And the fourth area of finance is international finance. This is actually any version of corporate finance, investments, or financial institutions, but with an international twist. So if you're working in international corporate finance, this could mean that you're working within a subsidiary or with a subsidiary of a larger firm in another country. If you're working in investments, it could mean that you're working with American depository receipts. It could mean that you're working with international stocks or international bonds. And in terms of financial institutions, it could mean that you're working with banks, insurance companies, or other financial intermediaries overseas. In any of these positions, it's going to be critical that you are aware of and managing exchange rate risk. So in international corporate finance, if you're buying raw materials from someone overseas and those raw materials are priced in another currency, it's important that you do manage that exchange rate risk. And depending on what country it is or what region of the world, you may also be concerned about political risk because that could affect the exchange rate, which could then affect the price of your raw materials. Employment positions in this area mean that you'll have to work in or travel a lot to another country. Obviously, you'll have to be fluent in more than one language, and you're also going to have to be culturally aware. So those are the four main areas of finance. And again, in this course, we're going to be primarily involved in corporate finance, although we will talk about investments, financial institutions, and international finance throughout the semester as well. But in this course, it's important to remember that you're the firm's financial manager, and so you're making decisions about the firm from a financial manager's perspective.